The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis, from the city of brotherly love. It's a little cold and snowy here today in Philadelphia, but boy, I sure like the city. The people are very, very friendly, and my two little grandsons are as sharp as a tack. Take right after everybody in the family except the old grandpa. Folks, I wanted to mention to you that there is a article. I don't read anything, but occasionally I have friends that send me articles that have been written. I have one from Zero Hedge. I would definitely recommend to go to Zero Hedge and click on Grant Williams, GrantWilliams. He did a talk for the Cambridge Institute, 1/2 hour. It's on YouTube, and it's a tremendous show. It's everything that I believe in. He might be as wrong as I am, which it certainly looks like, but we'll see. We have not made a new high in the New York Stock Exchange Index as of yet. But we'll have to wait and see if that's going to happen. Today and the day following Thanksgiving are two of the most bullish statistical days in the market historically. Better than 75% of the time, the market closes higher the day before Thanksgiving and the day after Thanksgiving. I believe part of that is the fact that it is the lowest volume day of the year tomorrow, but it's also the holiday atmosphere. I know here in our household, it's very festive. We enjoy, sharing some of the benefits that we've had with people that don't have as much, which is fun to see the kids, react to this. It's really great. But the main thing is that we really are blessed here in this country with some wonderful things. We got a lot of things wrong, as we all know, when you watch what's happening in, Missouri, and they're having problems in Hong Kong now, and, people that always have more than they want usually raise the most heck, so who knows? I don't know. But I feel badly for everyone that has to go through conflict like that, but that's just the only way you can get by, I guess. That'll be the end of my soapbox presentation for the day. As we talked about last week, the Bradley model is in the zone starting on the 22nd, which was Saturday. That extends out 5 days. That's tomorrow. And then in the holiday, it's going to be really difficult for the market to close down tomorrow, folks. I mean, really difficult. You stop and think about it. It's the last day of the month, on an up month and an up week, and the biggest up year we've ever had. Hello. I mean, if it closes down, it's not going to be down by much unless, World War III breaks out, and I don't think that'll happen. But I better shut up. Anyway, we'll just see what happens. This is the biggest run we've had in a long time. It's since October 15th. It's one of the biggest outlier events we've ever had. Apple was up 29 days in a row without a pullback of more than $1.50. And, the rest of the markets haven't had much of a pullback either. The most they've ever had was 1 day, day and a half at the very most, and then continuing higher. No correction at all, not even a 382 of any kind. But that's how the market's supposed to end when it's ready to end. This is what happened in 1929 into September 23rd. They had a run like this. Very, very similar to it. I don't know if this is going to be like 1929, but like my grandpa said, if it smells like a duck, walks like a duck, and looks like a duck, the chances are it just might be a duck. So we'll have to wait and see if that's going to happen. But I really recommend you listen to this Grant Williams' presentation, and in particular his charts. His whole theory is based on Keynesian economics. It basically says you got to work to get what you want, and when you add debt like we've had, that this is this is really not a good thing. And he showed the charts of why the Federal Reserve has pushed the envelope farther than they ever even dreamed. And if you look at what Japan's done, they not only took the envelope, they folded it into a paper plane and sailed it off into the sunset. Those are my words, not his. But he really shows you what debt has accumulated here in our country over the past 35 years. And when I went to work for Drexel back in '76, the only credit cards I believe we had was American Express. We didn't have visas until a little bit later. I'm not even sure exactly when that was. But, the credit thing has gone, totally bonkers. They're just totally out of control. Even though rates, look where rates are, folks. I mean, they're, passbook rates are negative in Japan. They're negative in Germany. They're about 0.25% here. And yet, your rates on your credit cards, I heard someone yesterday talk about a 16% rate on a credit card. I think that's a pretty good profit margin for a bank. But, wait, I think the average rate on the credit card is 8%. If you don't pay it off, you're basically getting a real bad hickey for not paying your credit cards off, every month. But they'll have to, everybody's in a different situation, so you can't really say that. After looking at all these charts, nothing's really changed. The NASDAQ's made higher highs. The S&P made a higher high yesterday, and the futures and the cash with an incredibly bullish number with a GDP of 3.9%. And come a long way from where it was back in March of 05, 09. But we'll have to wait and see. The interesting thing from a technical perspective that I can see what's happened over the past 2 weeks, Japan pulled this helium balloon out of the hat on October the 31st, which was trick-or-treat night, Halloween. And the Nikkei Dow shot up 7% and stopped. It's actually lower than it was after it hit that thing. And the Japanese ETF, EWJ, is actually doing worse because it's below the September low. So there's something not right with that picture. The Japanese yen currency that we pointed out here on Monday's show has made a 61% retracement from the 1998 high. We've had these types of corrections in the Japanese yen 4 other times. If you go back and look, we had it 98, 2000, 2007, and again now. So these are just normal things that have happened, even though Japan has pulled out all the stops. They're playing in a poker game. They bet all their chips, and they've only got one card. They've only got the first card that they have, and I'm not even sure that's an ace. So we'll have to let's see what history is going to say. But this article by Grant Williams goes back to the 1700s, showing you debt cycles, in particular the last 100 years, from 1914, which was the Council of Versailles. And then we had World War I. After that, we had World War II, and then Vietnam. And he goes through the cycles of war based on work by Kondratiev and Schopenhauer and all. It's just really a really good piece, and he's an eloquent speaker. I don't know all of his background, but I frankly would have been able to use any of those charts, and I couldn't have done it as well as he did, but it's what I think is happening. You just can't print money like this all the time and expect it to come out good. I know it's different this time. Folks, stop and think just a tiny little bit, okay? I mean, this is a Federal Reserve Bank. It's not a bank for the Federal. It's a Federal Reserve private bank. It's 3 blocks down from the White House on Pennsylvania Avenue, and that's the only relationship that it has with our government. Okay? I mean, that's basically what they're doing. You don't know exactly what they're doing, and they're not telling you exactly what they're doing. That's part of the mystery of it. That's why they did this thing on Christmas Eve in 1913 at Jekyll Island. This is all, predicated on, the way they want to get the economy to work. What Grant Williams says in this little 30-minute presentation that he gave is that the Federal Reserve is trying to manipulate the normal business cycle. Grant Williams' whole talk is based on John Maynard Keynes' premise of supply-demand. And Keynes was the first chairman of the English Central Bank. So that's the main thing that we're watching here. Now, I'm going to post into the Tiger TV the New York Stock Exchange Index, and overlaid on top of that in blue is the Dow Jones Industrial Average. And as you can see, the Dow Jones Industrial Average has continued to march higher. than it was in July and also September. But the New York Stock Exchange Index, which is basically all the stocks on the New York Stock Exchange, has not taken out either the July high or the September high as of yet. We're very, very close. We're within about 3%. So all it would take is another 150 points or so in the Dow Jones, and we could very easily, have that into new high ground if that is going to be the case. One of our good friends, Mr. Z from Philadelphia, gave me a call and asked me about Tom DeMarc's signal on the long-term weekly and monthly chart on his sequential, and we are at a sequential sell in the long-term weekly and monthly based on Tom DeMarc's work. We're also at that same thing with the T6 pattern with H.M. Gartley. That's the same 1, 2, 3, 4, 5 expanding, broadening top formation. That's in the Dow, the transportation, utilities, just about everything. I mean, it's everywhere. So, maybe it's different this time, but, just protect yourself. Listen, I listen to Basil as much as I can. I can't listen to Steve because I happen to be real busy when Steve is giving his show, and there's no way I could do that, but I like to listen to it. And but Basil will give you some really great advice. I mean, watch these numbers that he talks about. He's kept you along most of this run here, which is great. And when that guy gets bearish, folks, you flat out better pay attention to it, because I'm impressed with what he does. And I tell you, I don't get impressed very easily, because I've been doing this for a long time, and there's only a few people that I listen to out there. One is that little voice in the back of my head that's wrong about 3/4 of the time, but that 1/4 of the time that it's right has kept me in the game. And so that's the real beauty of what's going on. I have to tell you a quick story. It is really funny. I take the family to dinner last night at one of our favorite Italian restaurants here in Philadelphia, and we were chatting about our trip to Atlantic City. And Sarah mentioned that they had abalone on the menu in Atlantic City, and I haven't seen abalone on the menu in more than 35 years. It's endangered species in California, and the price of it was $125 for 6 ounces of abalone. And Kelvin's daughter, or Sarah's daughter, our daughter-in-law, Vivian, says, "Oh, my gosh." And my little 3-year-old grandson, who follows me around all the time, said, "Shut the front door and raise the rent." And I swear to God, that whole restaurant heard him, because he just blurted it out, and everybody started laughing. And, of course, once he realized that he had the attention, he wouldn't shut up. He was like a parrot. Everything that happened was, shut the front door and raise the rent. We finally had to put duct tape over his mouth before he would stop. But it was really funny. But can you imagine $125 for 6 ounces of fish? Abalone's wonderful, but boy, it's not that wonderful. So it was just a little family thing that I thought you might be interested in. If you're not, that's okay too. Anyway, one of the things that we have to keep in mind here is that the last 4 days of the month and the first 2 trading days of the month are two of the most positive times in the market. It's just really unusual. Okay, we've got to take a little break here with the Dow.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, and I think we have our good friend from Mexico and Atlanta and parts south. Charlie, are you there?
Here, and by the way, if I lose you, just keep the analysis going.
I'll do my best.
Okay.
How are you, my friend? Thanks for calling in. I imagine you're calling about Priceline. Is that correct?
Yeah. But, you mentioned how I am. I'm going to tell you a quick story, like you tell a story. Imagine traveling on a Mexican road at 70 miles an hour, coming into a turn and not making it quite right. Went off the road, rolled the van over, did some damage to it, managed to, so somehow the van stopped. I came out of it without a scratch. And I'm still scratching my head. How could that happen?
Charlie, it's really simple, buddy. 4 shots of tequila will cure just about anything.
I need 4 shots of tequila to prove my driving or slow down, one or the other.
I was traveling with my good friend Eddie Horwitz, one of the market wizards. We went down to Mexico to take the Copper Canyon train ride, which is one of the top 5 train rides in the world, and we were on a bus over Chihuahua in the Mexican mountains in the silver towns, and I swear to God, the bus driver had glasses that were an inch thick, covered with mud, and he's driving about 55, 60 miles an hour, and it's raining, and the bus is sliding back and forth, and it's full of people, and they're eating and like nothing's happening, and we're looking at each other saying, this is it. We're never going to get out of this. You're looking over the side, and the rocks are falling off. I don't know how we ever made it out of there, but boy, when I got off that bus, I was shaking like a leaf. I would have walked back before I would have taken that bus back again. But I know what you're going through down there, buddy. Those roads are treacherous even when they're fixed.
That's exactly right. Reason I'm calling, I want to know, it looks to me like Priceline is setting up again for the end of the month. I want to hear what your thoughts are. We're short again the end of the month. Well,
it's made a 61% retracement of the high we made on November the 3rd. It's a week, much, much weaker than market stock. Realize that NASDAQ has went up and made a 1.27 expansion, and this stock has lower tops. I mean, it's certainly in a downtrend since April. No question about that, as you pointed out. We made the big ABCD down there at 1025. We rallied up to the 618. At 1225, we came down to the 618 at 1080, and it's taken 3 weeks to make a 61% retracement, back to 1166. It hasn't even rallied $100, which is, it's a very, very weak stock compared to what it's been doing. And that's the way I look at it. And when you look at the market environment with everything bullish, this stock doesn't have as a lot of friends as it used to have.
I see. So you feel that it will take the next leap down?
I don't feel anything. All I can tell you is that the chart looks down. I mean, the ABCDs are measuring to about 950. If this gets above 1232, up about $70 from where it is now, then I'm certainly wrong. But as long as it doesn't take out 1232, to me it looks lower. If you stop and think about a stock that's been this strong for so long, and all of a sudden it's not acting as good as the market, that's one thing to look at. And then if you look at the fact that it's got lower tops and lower lows since April, that's another thing to look at. And then if you realize that it's right at these Fibonacci ratios, it's telling you to say, look, I don't want to go up a lot higher. That's what it says to me.
I've also noticed that on occasion you can see someone with big numbers, like 30,000 shares, big numbers, just dropping, making a sale and then drops the stock like it did yesterday. So there's somebody in there that's selling, it looks like.
Well, when you're talking about 20, 30,000 shares, you're talking about somebody like Tom O'Brien. So call on his show and ask him what he's doing, because he's the only one I know that's going to throw those kind of numbers around Priceline, because it's only, $1,165 a share. So 20,000 shares, you're not talking, a whole lot of money. It's only like $20 million, so it's no big deal. I'm hoping Tom's listening, because I want to wish him a happy Thanksgiving.
By the way, talking about Tom, when Tom and Steve were just getting started on the Steve show, I called in about a short called SRS. And, it's been going down, and I like I'm saying to myself, I don't know, maybe you can look at SRS and tell me if you think it's got more to go.
SRS?
Yes, please.
And that's Sam?
Sam Robert Sam.
Sam Robert Sam. Okay, I'll tell you what, Charlie, we're going to certainly do that, but you'll have to hold on till after the break, because we're going to have the longer break coming on. But if you have a time to hold on, I'll be happy to look at it. And if you have to go, I'll still report on it, after you hang up. So it's your choice, but after we have the break, I want to look at it. There's one other thing I wanted to mention.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and we had Charlie on the line from, I know he's from Atlanta, but he was traveling down into Mexico today, and I want to wish him a happy holiday. Charlie, you asked about SRS. I don't know what it is, but I pulled up the weekly chart on it, and it was trading at around 4,400, and now it's trading at around $15. I would call that a sell-off. If you want to buy it, Charlie, you only have a $15 risk. That's all I can say. I wouldn't even look at it. But it's been at this level of $15 for quite some time now. It's making new lows. It's I don't even know what it is. I have no idea what SRS is, and I had something like that on one of the Army menus. I don't remember what it was called, but it was something like that. It was SOS. That's what it was, not SRS. Anyway, Charlie, this thing was a sale up there. That was the it's double short real estate. Wow, why else? Especially, it must be Hong Kong real estate. Thank you very much for bringing this to my attention. If I'd have been thinking a little better, I would have figured the only market that can go straight up without corrections besides the stock market is the real estate market. But that's neither here nor there, so we'll see what's happening. But as you can see, back in 2008, this was making that T6 expanding triangle that we're seeing now all across the board in the stock market. This one was expanded a little bit. It went a little bit higher than we were expecting, but the stock market's gone a little bit higher. But the pattern is there, 1, 2, 3, 4, 5. That's on the weekly basis. We're seeing the same thing, but it's not nearly as blown up in the stock market. One of the things that this gentleman, Grant Williams at Zero Hedge, gave the speech on, he's not with Zero Hedge, he's with another firm, but he was giving a talk at the Cambridge Institute, and he said that the stock market, he said the volume, and you can see it easily, the volume is just dropping and dropping and dropping in stocks, and stocks keep going up and up and up. So you got to ask yourself the question, who's buying? And his answer to that was the Federal Reserve. He said they're responsible for all of this run, and he believes that they're in a perfect storm. They're trying to catch a wave that's coming over at 150 feet high, and they're in a little canoe, and they're doomed to have some really bad things happening. And he said this is nothing compared to what's happening in Japan, what the Bank of Japan chairman did with his $8 trillion. He said that was the biggest fallacy that he'd seen since the South Sea Island bubble. So we'll see what's happening. Anyway, we'll have to wait and see what brings us to the market pretty good, or to the next few days in here. But the complacency level is very, very scary. And the reason why I say that, I've been involved in these things before, and when I see one like this with all these things happening, I know this is my last dance. They don't invite me to the prom anymore after this one, folks. There's just not enough years on the clock to get me there. So this is going to be a real interesting one if it does turn out the way that I think it's going to. But when I look at all these charts all across the broad markets and the divergences that I'm seeing, this is the biggest smokescreen I've seen in a long time. I know I'm wrong, and I know it keeps going up every day, just like it did before. But you got to be careful. It's like the guy. Well, better not say that. I don't want to get thrown off the air. I was going to tell you a little joke, but that's not the time for it here. So we'll have to wait and see. Pick a joke another time. So we'll see. Okay, I want to talk a little bit about the crude oil. Crude oil has traded below $74 a barrel, making new lows on the week. Gasoline is in trouble. Heating oil is in trouble during the time when it should be really strong. So this is telling us that, we still have deflation going on across the board in some of these things. Now, the interesting one on the commodity front, and I got to bring it up today again because we don't have a commodity show tomorrow, is the fact that we have a situation in gold where we're starting to see increases in open interest. This is a really good spot to take a look at gold, because if we can get gold above $12.50 an ounce, I think we've got a real shot at it. And I mean, the gold has taken a year and a half, actually 2.5 years, to make the same correction that it took in between 2006 and between 2004 and 2006. It made corrected 38% of its value, much like we did this last time right here. The percentages were pretty much spot on. I don't have those in front of them, but, we'll have to wait and see. However, I would mention something. On Monday's show, I talked about the fact that, we had Grenada and Aruba and also Malta. Their central banks have decided to go in with quantitative easing. And then today I found out someone actually sent me an email telling me that they had heard that the Galapagos Islands was also going to do quantitative easing. And on top of that, Nepal, who would not go with quantitative easing, has increased their armed forces on the northern Chinese border of the Himalayas up there, so that there's a possibility of a armed conflict between China and Nepal. So we want to keep our ears to the grindstone on that one, folks, because that could be another major spot in the world that could cause some problems in the financial markets. Probably not a lot, but you never know in these days, because, Nepal being a big exporter, could have a, really big impact on, Chinese economy. So we'll have to wait and see. I don't know how you short real estate. I guess you buy that SRS if you wanted to short real estate. That's an interesting play for a 401k. If you wanted to, buy 10 shares, put $150 in it and see what happens. I mentioned on this show a couple times ago, about 2 months ago, there's a piece of property in Hong Kong up on Victoria Peak, which is the nicest place in the world for a view, one of the most beautiful places in the world, on top of Hong Kong Island, and it overlooks China, Macau, and the South China Sea, Tsim Sha Tsui, which is Kowloon. It's absolutely fantastic place. There was a 3,200 square foot house, 4 bedrooms, 4 bath, tennis court, and a pool, gate enclosed, and also had security cameras and everything like that. 3,200 square feet, and someone from China picked it up for the paltry price of 66 million US dollars. That's $22,000 a square foot, folks, for a house. You could have bought half a Tucson probably for that. Who knows? But that's Hong Kong. That's not the rest of the world. The rest of the world is, they're more normal. It's just London and Hong Kong. I mean, New York is cheap for some of these folks. It really is. And it's really, really cheap. But you look at places that we just came back from Australia and New Zealand, and it was very expensive down there. I was shocked, the other side of the world, that it was so very, very expensive. So this is something that you've got to keep in mind. I'm not believe me, folks, I know about as much about the real estate as I know about the stock market, which isn't a lot, but I know a little bit more about the stock market because I've been doing it a lot longer. But I have bought some of the best property in Southern California. I held it for 15 years, and I still lost money. And if you can explain to me how I did that, you're a better man than I am, because I was in it with my accountant, and he was the one that told me to get out, and we did. And about 3 months after that, it never looked back. So, who knows what's happening. High-end houses all across the country are going higher, because why not? It's the 1% of the people that have benefited from this expansion of this inflated thing that the Federal Reserve has done. The question is, they've been buying all this stuff. Who are they going to sell to? That's the question. Mike, this is what I think is happening. Let me get on my soapbox here just a second here, climb up on here. I think the Fed has used this to get out of a lot of this stuff. That's just my guess. I don't know. We'll see. Those people over there are not stupid, but again, they're not traders either, so we'll have to wait and see. They're basically college professors. None of them have ever really owned a business or worked for themselves. Janet Yellen certainly hasn't. She's spent her whole life with the Fed. Bernanke is a college professor. Greenspan, he was a college professor. Volcker was a consultant and college professor. So all those, telling us that you don't really have a lot of stuff, so we'll have to wait and see. The one thing that I would mention to you is that they make mistakes just like we do. If you ever go back and look what the Fed was saying in the fall of 2007, they said all systems were go. They could see nothing wrong with the real estate market, and everything looked good. They couldn't see any problem with credit default swaps or any of the things like that. I mean, that they make mistakes. I mean, hello. The difference is when they make a mistake, they don't even get on the news. When I make a mistake, you guys throw vegetables at me. Thank God I'm a salad eater. Otherwise, I'd be in big trouble. But that's neither here nor there. So we'll see what happens. It's just this reminds me of things I've seen before. Something wicked this way comes, as I recall Ray Bradford's line in his macabre movies that he has, which I didn't watch, but my children loved them, so I had to drag myself there and wait for them outside where they went to the movies, but that's neither here nor there. Okay, now let's get back to the markets. We talked about crude oil. We've talked about gold. Silver is acting a little bit better than gold for the first time in a long time. Silver won't even back off at all. I happened to be here in Philadelphia, so I checked out a couple of coin places over the past few days, and they just literally don't have any quantity of silver to buy. If you wanted to buy silver rounds, the $1 silver liberties, you can buy 5, and at the very most 10. You couldn't even buy 20 any place, but if you want to try and buy 100, forget about it. But nobody has that, and we're going to see if that's going to be the case or means anything or not. But just not a lot of it around, that's for sure. I believe that we're looking at the price of crude oil to come down to about $67 a barrel. That's another 10% down from where we are right now. And that's going to be a real interesting spot right there because at that point, sometime below 80, I understand that Russia is under cost of production of oil. Now, you can't believe that either because you don't know what their cost of production is because they don't tell you what they're doing. So you don't really know what that is. And so that's why I just look at the charts. If they're going down, there's more selling. If they're going up, there's more buying. That's all you really need to know. So one of the things you might want to keep on, I really like this SRS chart when I look at this long term like this and the fact that it's short real estate. And believe me, folks, the number of people that you could convince to short real estate is you could put it on the nose of a tsetse fly in bold-faced type and no one would be able to see it because there's nobody that ever wants to short real estate. That's impossible. That's the one thing that never goes down. So keep that in mind. But that chart, it went from 4,400 to 15. That's a big drop. I think that's more than 10%, isn't it? See, 4,400, 10%. Yeah, it's certainly more than 10%. So whether that happens or not, I don't know. I'm not into real estate business. Tom O'Brien's the expert at that. He does a great job at real estate. And he was buying at the bottom when nobody wanted it back in 2008, 2009. And he certainly knows that business a lot better than most. And, of course, he's quite good at stocks, too. I wanted to mention one other thing about the markets, the fact that on this low volume that we've had, the volume has dropped, considerably, more than 33% below normal, as I've heard reported. And I believe that this is something that we have to, keep in mind. If this volume, does pick up, is it going to pick up on the upside? Are people that have just been sitting on the sidelines all of a sudden going to jump in and buy stocks? I mean, they haven't done it yet. What would cause them to do that? And the one thing that I was thinking that could cause it is the patterns to just fail and we just have a melt up. In other words, the market just explode to the upside. We'd have to get above 18,000, and not only that, not just get up, little by little. It's got to get up there, blow out of here really fast, either with a gap or something like that. News items such as, Putin wants to annex Europe or Germany or something like something crazy. I don't know what it could be. A peace in the Middle East, that would be something. And they haven't had that in 3,000 years, so this would be the first time. Something crazy like that could possibly do it. Or we find 5 billion tons of gold that we didn't realize we had, something crazy, then you might see something like that. But these patterns, as bearish as they are, all across every index, I haven't seen that before. Maybe this is the time that I'm supposed to see it. I'm in 7.5 furlong in an 8 furlong race, so I haven't got a lot of many days to the finish line. I hope they're years, but I just don't think you're going to see one like this anymore. I remember, I've got to take a little break here, but I did remember one other time in my life when I was trading for Commodity Corporation back in 1985, and I was incredibly long bonds. I mean, I really, really loved the bond market, and I had bought bonds, and I'd been in them for 5 or 6 days, and they didn't go anywhere. And I had a thing in my equity rules that if I was not making money after 7 days, that I had to liquidate the position. Well, I'll get back to that story after we take a break, and we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we've had I'll finish the story. When I was at Commodity Corp, I had a big position on in bonds. After 6 days, I didn't have a profit, didn't have a loss. I was break even. I got out of the position on the next Monday. I went into the position again. I waited another 6 days. I was still even. I got out of it. I tried it again the third time, and on the fifth day, I was at a small loss. And on the fifth day, Henry Kaufman came out and said interest rates were going to go lower, and the market took off and never looked back. It was one of my best moves from 1985, but I kept with it for a long period of time, and it finally worked. Someone's asked a question about Apple. I think it's at almost $700 or $800 billion valuation. That's got to be one of the better performing stocks in history, and looks like it's going to be hitting $1 trillion before Christmas time. I thought it was going to top at around the 113 level. I bought some Apple puts and sold some calls at that time as a credit spread, and it's actually it's gone against us a little bit, but really not very much considering that the stock has jumped 5 points. The position really hasn't moved a little bit. It's only moved a couple dollars against us, which is very, very surprising. The good thing about Apple here is that this is in a historic run, folks. 28 days in a row up in a stock. That is, one heck of a run. There's no question about that. That's a big run. Now, runs that happen like this, these are not the beginnings of bull markets. I hope you realize that. That's how markets end. That's not how they begin. If you remember when Apple was breaking down to 385 back in April of 2013, it had one of these runs where it kept running and running to the downside, and nobody wanted it. At $703 a share, back on July of 2012, all 33 analysts were bullish on Apple. There was not one that was bearish, and the stock lost half of its value. And I'm pretty sure you're not going to find many bearish people, on Apple right now. I mean, it's hard to because, they keep coming out with great products and the market keeps going higher and higher and higher. So, it'll probably never go down, but maybe it will. Who knows? It's certainly completed all the patterns that we looked at. I want to take a minute here to thank everybody at TFNN, the wonderful staff that they have there, and especially Tom O'Brien for bringing everybody together. You folks are really lucky to have, people like Steve and Daryl and Basil and the whole group is just, Andy, they're just a really great group of guys, and they really do their best to give you really good information. So we should be thankful that they have this forum that we can actually work through. It's really good. So what's interesting here in the market is the fact that we have not made new highs in the stock market, folks. This is another divergence. It's the third time since July. That's 6 months. I mean, this is a very, very poorly acting market, and now it's starting to lose momentum. Even the rate of increases is dropping and dropping. So be real careful. Just put your stops in, and if you're in your IRAs, make sure you protect yourself because something is going. They just don't allow this to happen very much. I've never seen it in my history in the markets, and I've been in the markets for 55 years, but I've studied them since 1875, every single market. And so all the stock markets, the major stocks, the bubbles, I've looked at all of these, and they all look alike. It's hard to pinpoint exactly when they turn down, but we'll see it. The Russell has still not made new highs. But so we've got to, keep in mind that these markets can go higher than you think they might. But when they come down faster than they go up, and this went up pretty fast. Since October, we haven't had a breather. So that's it. Live every day in an attitude of gratitude, and may God bless. And happy holidays.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.